go through the agenda of the day so that you guys know what's coming, so that you guys, can plan your next hour like that. Okay, so on the agenda, I'm going to talk quickly about ThinkMarkets and synthetics on ThinkMarkets, do analysis on ThinkMarkets with you guys, talk about ThinkCreators, how you can earn extra money on there, and then also quickly talk about blueberry synthetics. And then Jason, Mr. Precision Synthetic Trades, will take over and do some well-trade synthetic analysis for you guys, his strategies and stuff on there. And then at the end, we will do, and you will also talk about the indicator, just going quickly through how that works again, just to remind people, so the indicator as well. And then at the end, for the people who stayed until the end, we will do a giveaway, a $10,000 funded account challenge with Blueberry Funded. You will get it. One of you guys will win that. So I will spin a wheel at the end, and one of you guys will win a $10,000 funded account challenge. So stay till the end so that you can stand a chance. I mean, big odds of you winning that. Anyway, so let me get into it quickly. I'm going to be very quick with this part, so don't stress. Guys, ThinkMarkets has recently launched their own synthetics, and it's very nice to trade. So I really suggest you guys go check it out if you haven't already. When you are on your dashboard over here, the best way to trade ThinkMarkets synthetics is with their own platform called ThinkCreators. So ThinkCreators is like a trading view where you can then place trades on it. Looks like TradingView. You can analyze it like TradingView, and you can place trades on it. So once you've opened, create a live account, you can go in there and you can literally create your ThinkTrader account there. So I'm just quickly going to go and trade now because I already have a ThinkTrader account. And then once you're in here, sorry for someone who joined late, we will do a Blueberry funded account giveaway at the end of this session. Okay, so once you're in, you can see all your synthetics. You can see the booms, the crashes, the volatilities, the jump. Very nice. So you can trade it over here. If you want to place a trade, you press sell or buy. I currently have some play around money, demo money in here, so I'm just going to show you guys. You can literally say sell. You can say confirm sell, bottom right corner, and you are in the trade. Wait, place order, then you are in the trade. So you will see position created, and then if you want to close, you just press on the little X here to close that trade, close position. Okay, cool. So that's how you place a trade on here, and it looks exactly like TradingView, which is very nice. Okay, let's jump into some analysis quickly, how I trade any synthetic market, ThinkMarkets, the Riv, WellTrade, etc. This is how I trade my synthetic markets. So I'm going to quickly go to Crash 1000. There's two ways you can trade it. I don't know if you guys have seen my YouTube videos, but usually the boom and crashes I do on the 1 hour, and then I go down to this lower time frames to confirm my entries. And then with volatilities, I've got my volatility 5-minute strat that I use there, which I will go through now quickly as well. Okay, so I'm going to quickly go through this. You guys can see over here, Crash 1000 going up. You can see breaking highs as it's going up. Okay, that means we are in a bullish trend. So we are mostly looking for buys because we want a higher probability trade. You want the biggest probability for success. So you want to place buys when you are in a bullish trend. Okay, but you can see when this low over here, which is a major low, was broken to the downside. You got this low that's broken to the downside. You got this low that's broken to the downside. That is when we change, or our bullish momentum changes into bearish momentum. So we are then looking for sells because we are breaking these lows. So we are market structure shifting into sells. Okay, so now we know, okay, sorry, just want to delete that. So now you know we are looking for sells because we changed into a sell market on the 1 hour time frame. So now that we are looking for sells, we have this movement going down as I've just told you guys, and we get the movement going back up. Usually when it goes back up like this and you can see the green candles moving up again, that is when you must grab your Fibonacci tool. That is then the most important tool to use on the next step. This is where you will then draw from the top to the bottom like this. And then you need to find the highest probability area for a sell to take place. And that is according to math and Fibonacci, and the guy who invented the Fibonacci tool, the highest probability area for that next leg down is between the 50 and the 78 zone. So what we need to do is we need to block off the 78 to the 50, so that area there, block it off, and we want to look for an order block in that block. It can touch it, it can be in the block, as long as it's something to do with the block, so it's touching it or inside or whatever. We need to find that order block, and obviously the only order block that we can find is this green candle over here. Alright, there we go. So now I have my order block ready, and you guys can see eventually the chart came and touched that order block. So now what you can do is you can place alerts. So people have been asking me, but you know, I can't watch the chart all day, or I can't keep an eye on the chart all day. How do I know when it goes to my order block? You can set alerts with ThinkTrader, and I'm pretty sure you can set it with TradingView or MT5 as well. So you are more than welcome to set your alerts, and then when an alert comes and it touches, you can then go down to the 5 minute, because you want to confirm your trade on the low time frames. You don't want to just climb into a trade. And just as I'm saying this, I realize now that we can't go that far into the past on the smaller time frames, but I'm just going to show you guys an example. Like for example over here, same thing basically happened over here. So what we would like to have happen is that market structure shift also change on the low time frame. So you can see we are going up, we are bullish, and then, you know, making new highs as we are going up, and then eventually it breaks these lows. You can see how it breaks the low to the downside, and that's when you can find any way possible to place a sell. There's a lot of ways. I've said this in my YouTube videos as well. Find a reason to take a sell. You can do a trend line retest. You know, you can take a fair value gap and an order block. You can see touch the bottom of that order block, fair value gap. There's another reason to sell. You can even fib the smaller time frames. You can see 61 retest. So there's a lot of reasons to go into the smaller time frames to take a sell. So find one or two reasons. It could be an order block, trend line. It could be fair value gap, order block, a lot of things. Fibonacci order block. Find one of those reasons to take the sell. You just don't want to climb in blindly on the higher time frames. It's better to go to the lower time frames and to find another reason. So now you can actually place your stop loss. Let's say you climb in there very tight there above that high, instead of on the bigger time frames. Let's say for example the order block on the bigger time frames like ends here. Now you have to put now you have to put your stop loss like for example there or something. So you can place a much tighter stop loss on the lower time frames. Okay, cool guys, that is my boom and crash strategy. Let's quickly go to the volatility 75, where I like to trade on the 5 minute. Okay, we've got our chart here. Okay, I'm just gonna grab this area over here. You guys can see once again we are moving down, so we are bearish here on the left, and then we got this little bit of a consolidation here in the middle, and then we've got these highs forming. Then eventually you can see we are breaking these highs again. So there's a high being broken there, and then we break this high again. So it's always nice to, you know, mark out your highs and seeing that we are going into a bullish mode again. So on the low time frames, it's very important to not overthink it, because on the higher time frames your high would have probably been here. So you don't want to actually take swing trades on the 5 minutes. This is a scalping strategy. This is a quick like a maybe max an hour type strategy, 2 hours in the trade type strategy. So exactly the same thing you'll have to do again. So you can see we are bullish. It's moving down again over here. You take your fib from the bottom of this move to the top of that move over there, like that, and then you block it off again, the 78 to the 50, exactly the same as we do on the higher time frames. And then you can see we have a few order blocks that we can actually identify. There's one there, and here is one. Yeah, let's say like, yeah, there we go. Okay, once again, now we are waiting for some type of reason to take the buy into one of these two order blocks. So I don't know if some of you've seen my YouTube videos, but we have a W, it's actually a double bottom and a double top. So it looks like this. So it's a W and an M. So it's a double top, double bottom, but just to remember easier, a W or M. You guys can see this W here. Okay, so that would be your indication to take. Go check on the 5 minutes. You guys will see it a lot. Even like on this smaller one here, just to show you guys a smaller one as well. Here you can see a W. You can see the red candle coming down. There's your W again. So the best way to actually then take this trade is to wait for a, it's called a bullish engulfing. So the big candle after a bearish candle. So for example here, you can see there is a little bearish candle with a bullish engulfing, and this is where you would take your entry. On this side, you will wait for this candle over here. There's a green candle that's bullish engulfing that red one. Sorry guys if it's a little bit small for you guys to see, but there is your bullish engulfing there. Even this one is also, anytime a green candle is bigger than the previous red candle, there's options for you to take entries. So you guys can see those two entries there. Okay, even just the fact that it's a double bottom, you can also enter when it rejects that second resistance support over there. So guys, that is the 5 minute strategy from my side. We're going to do questions and answers also at the end. So if you have questions, please write it down or remember it so that we can answer those questions for you guys. So if you have any questions now about what I said, please write it down. We will come back to it and answer it. Okay, to the next part. We're going to quickly talk about ThinkCreators. Okay, for those of you who who would like to make some extra money that they can trade with. It's very, very easy. Go to thinkmarkets.com/ThinkCreators. You sign up quickly over here, and then you'll get to a page that looks like this. Okay, so you have to just complete these steps. 10 points equals $1 that you can then get to trade with. A few people send me screenshots. They completed everything. They got like $120 from doing all of these steps. So you can get $120 just following these steps. It should take you like maybe an hour to do to get $120, which is well worth it, especially if you want some extra trading capital. So open a ThinkTrader account. I literally already did it. This is your account. Open that up, you get $3. Visit their YouTube channel, $1. Join the Discord server, $3. Download the ThinkTrader app, $3. Tell them what instruments you trade. I mean, this is the easiest dollar you'll ever make in your life. Follow them here. That's follow them there, $4. Comment and like our YouTube video. Click on that YouTube video, comment like $1. Share your trade. Literally share your trade. $3. Make a TikTok. So here comes a little bit more, it takes some time to do these ones, but I mean, take your camera, talk about a trade you took, or a trade you want to take, or some analysis you did on ThinkMarkets. $10, $10, $10, $8. Write a blog post. If you get a ton of views, you get even more money. Refer a trader, refer your mom, refer your girlfriend, refer your friend. $4, $4, $4. And then everyone starts somewhere. Literally just upload a video of your trading journey, $10. So guys, you can make a nice amount of money by using ThinkCreators and just following the steps. Even if you don't want to make videos, you can just do the rest. You'll probably get like $20 or something, which is nice. Plus, it should be a little bit more. Anyway, okay, so with regards to Blueberry, if you want a prop firm that does synthetics, you're more than welcome to check out Blueberry. They have synthetic accounts over here. Tonight we are giving away at the end of this seminar or webinar, we're giving away a 2-step $10,000 account for Forex or for synthetics. So the person that wins, you can tell us if you want the Forex or the synthetic 2 steps. So we will do that at the end. But yeah, guys, go check out Blueberry. I'm currently doing the instant elite $5,000. I've got $400 locked up and ready to withdraw. I just have to drop one more trade tomorrow, then I can withdraw my $400 with Blueberry. So very exciting. You can do instant accounts as well, but we are giving away the $10,000 2-step synthetic or Forex accounts. Okay, guys, so that is it for me. Remember, if you have questions for me, just write it down and we'll get to it at the end. So yeah, I'm gonna give it over to Precision, and he will start with his side.
Awesome, everyone. So hope you are well. Hope you had a lovely day. So I'm going to jump straight on it. We are here on Wild Trade. I'm just going to show you a little bit like strategies that I follow trading the synthetic indices. I used to trade it on Forex and indices as well. So I'm literally just going to show you the strategy, the exact strategy that I follow on synthetics, on pain and gain, or boom and crash if you are trading the RIV, and also you can use it on ThinkMarkets as well on their synthetics. So when we have a price move that comes down, for example, we have our shift in market there, then we have another shift right over here. If this is how the market looks, the main focus I'm looking for is the highs and the lows, because what rests above and below these highs? It's liquidity. So that's the main thing I'm looking for. So before I even start looking at trades, I want my higher time frame trades, like time frames, to be liquidated. So for example, if we are in a pain pair, so that means I'm only going to look for sales. So my highs needs to be taken out on a pain pair in order for me to start looking at a sell. So let's say, for example, this high is being taken out. As you can see right over here, price took out the liquidity. The reason why it's liquidity is because there's stop orders and buy orders right over here. So basically, when we take out the high, we want to wait for the last low that made the push for this high. We want to mark this low out. And as soon as this low gets taken out, then we have a break of structure or market structure shift. So what we want to look for then, and this is where it's almost the same as Hanre's strategy, when we break the structure right over here, we are looking for order blocks, we are looking for fair value gaps, we are looking for breaker blocks, any type of POI that's in this leg we are going to look for. And then when price retrace into this area, we are going to look for on the lower time frame the exact same setup. Everything that's been happening here, when we enter our fair value gap or order block or breaker block, we are going to look for this exact same thing but on the lower time frame, and then we are going to take a trade to the downside, and then we get our continuation trades where price also reacts, and inside of this leg there's going to be a liquidity being taken, and then the same thing happening again and again and again. So that's literally the strategy that I follow. Let's quickly show you. So we are here on pain 1200. So if I zoom out, we can clearly see, so for example, this high, this low is probably, this range is probably like on the 4-hour or the daily high and low when we zoom out. So I know this is going to be a good probability trade for me to take if price comes above this high. Why? Because if we are on the higher time frame, we can clearly see here price is reacting from an order block zone right over here. Let me just get the rectangle, an order block zone right over there. And then we are going to go into our moves now. So let's just take it step for step. So we know this now. This is the high that's been taken out. So immediately when price came right over here, here we had the first liquidity sweep, right? But our confirmation was never met. Why? Because the low that created this liquidity sweep never got taken out. Then price went up again. We made a new high. Now where's the low that pushed right over here? It's going to be this low right over here. So price pushed up, came down. As you can see, we literally broke below this low right over there, that wick right over there. And now again, there's a bunch of confluence you can go look at. You can look at a breaker block. If you are someone that trades breaker blocks, you don't have to add everything all in once. So there's a breaker block, there's an order block, there's a fair value gap that's resting. Everything here is resting and overlapping each other. The breaker block, order block.
Sorry, Jason. Someone's saying they can't see your screen, but I can still see it. Can someone else confirm with me? Heinrich? Okay. Everyone else can see the screen. Okay. Lachlan, I think it's yours, eh?
Okay, so can I go on?
Yeah, you can. Yeah.
Okay. Awesome. So there's 3 POIs in one section. So that means this is going to be a really good confirmation zone for me to take a trade. If you're going to draw out your fib from this high to this low, you can clearly see it's above the 50% and it's at the 78.6 level right over here, 61 and 78 level right over here. So now let's just keep one POI just to make it simpler, the order block. So now when we are inside of this POI, right? So price tapped into the POI. Now we go down to the lower time frame. So let's go down literally time frame for time frame and see what happens. So now you can go refine it a little bit, your POI. So there's your order block now. You can keep it at 2, 3, or 1 if you want to do it like that. It would have been missed, but then again, there's our breaker block that's overlapping. There's a nice refined fair value gap right over here. So it's still in the same zone, right? So what we wait for now is we are inside of this zone. Let's just draw it out the full order block so you can see. So now we tapped inside of this order block. And now we are literally looking for the same exact pattern. There's liquidity that's being taken. Where was the low that pushed into this high? It was this low right over here. We broke through. Now you can draw your fib from this low to this high. From this high to this low, sorry. came into our 50%. That's overlapping with a fair value gap area here. And as you can see, price went down. If you want to go to the lower time frame to get more of a sniper entry, we follow the exact same thing. Here's our zone. Let's see if we can find something. Let's go to the lower time frame, 5 minute. Okay, so here we go. We took the liquidity. Now we can refine this high to this one, this low to here. So now, guys, there's two ways you can take this trade, right? You get an aggressive one and you get a more conservative one. The conservative one is the one that we did now, where you draw your fib from this high to this low. We get tapped into the 50% right over here, and that's the one that I showed you. We tapped in and then we continued down. Now you get a more aggressive type of entry. So this is where you get your market structure shift and a break of structure. So the first thing, what we wait for, we still wait for the liquidity. Now we came down, we had a small retracement, right? So just bear in mind, we never took out this low yet. So that's why I call it a aggressive entry. We had a market structure shift right over here. So the way I see market structure shift and break of structure, because I know a lot of people will get confused by it. A market structure shift is something like this. That's pointing to me market wants to change. We had the shift. To confirm the shift, we always wait for the break of structure, like the low that actually took out the high, to be broken to confirm the trend is going down. So that's the difference on the two, how I see it, the market structure shift and the break of structure. So now this break of structure, we created a low right over here. We broke this low, and now you have a zone right over here. You have your fib level right over here. So if you draw that exactly there, and that's where you get from your 50, 61, and 70.8 zone. And there's an order block and a fair value gap resting right over there. And then we had this big push down. So that's your aggressive entry. When we enter the higher time frame POI, this is your break of structure. That's your market structure shift. When we go down to the when we continue the trend, let's just go back to the 1 hour quickly. So then again, now we broke this low right over here, right? Let's just delete this. We broke this low. First thing that you can do, you can draw your fib from this high to this low. Again, we got tapped in right over here, or you can draw it from there. It depends on you. Like, there's no right or wrong for me. To confirm the higher time frame, like points of interest, I will take it from there. But if you are someone that just scalping, you can do this. But let's keep it there for now. So here we broke it. We retested the 50 right over here. So look what happened here. When we retested, right, we took liquidity. We took this low out right over here. Now you can draw your order block zone right over there. You can draw your fib again right over there. entered our zone, pushed a little bit, and then immediately it closed and it came down. Same right over here. We had a liquidity sweep, break of structure. If you draw your fib from this high to this low, in your 50% right over here, after we get again liquidity sweep into our zone, went down. Liquidity sweep, that's also with the order block right over there. There's a fair value gap where that liquidity sweep happened on the previous fib. And that's literally how I trade. I bounce from zone to zone. Now, when you come back up, when we have that shift and that break, so here we can see, all right, this low was created right over here. We're starting to show some market structure shifts. So here's the first one. So now, where will you take your break of structure? So let's say this leg is on the 4 hour. This will be your market structure shift. And then this will be your break of structure to confirm trend is going up. And currently we are actually in this zone right over here. So that's where price is currently. So if we want to get this move to the upside, we can break this piece of price action down and we can go down to the lower time frame. So now you can see it a little bit more clearly on the lower time frames. There's a low. There's your market structure shift. There's your fib. Let's draw from this one to this one first. There's an order block right over there, plus a fair value gap there. Let's just mark out that whole zone, extend it, and now you can see exactly it came in, we had a reaction, it came back into our zone, had another reaction, and then price went to the moon, literally. So here again, as soon as we get our point of interest, we can mark out liquidity sweep. Why do I take this as a liquidity sweep? When you go down to the lower time frame, you can see that's a low. There we go. There's a low, liquidity sweep. We had our break and then price went up after it tapped into the 15-minute order block there as well, just below the fair value gap. Does it make sense, guys? Like how I look for trades, literally bouncing from zone to zone. That's how I look at trades. Liquidity sweep, break of structure or market structure shift, and then you enter from an order block, fair value gap, break a block, inverse fair value gap, and then I use the fib as a confirmation of where price is currently at. Does it make sense? All right. Hanre, I'm just going to switch to the indicator quickly.
Oh, good.
Can you see it?
Yes.
Okay. Guys, so for those of you who have the indicator, it works on WildTrade, Deriv, and ThinkMarkets as well. So a lot of people is using the indicator only as like literally only the indicator itself. You need to use it as confluence with your own trading strategy. So for example, you can see the blocks are the order blocks, bearish order blocks and bullish order blocks. And these little red and green, those ones are the fair value gaps. So the order blocks only appears when we have a break of structure, right? And the fair value gaps, you know, that's the candles, the 3 pattern candle. So when we zoom in, for example, The reason why this order block was created, because we had a break of structure, price came back in, we had a push, right? So I use this indicator literally as confirmation with my own trading strategy. So for those who don't know, order block, if it gets violated, it becomes a breaker block. So you can use this indicator actually as a breaker block strategy as well, and not only an order block. You can use the fair value gaps as an inverse fair value gap strategy as well, and not only fair value gaps. Because an inverse fair value gap is a fair value gap that's basically being disrespected. So this is how I use the indicator. So for example, let's start right over here. The indicator created an order block right over here. We are actually on the same pair, paying 1,200. I want to show it to you on the same pair that we just did so that you can just understand how they work together. So here was that trade, right? That we had that reverse from. Here you can see it's in that fair value gap actually that we also drew out. Price went up. So here was an order block that's being created. There's a fair value gap that's being created. So now when price keeps on pushing up, right? Remember, we don't just enter, we go down to the lower time frame for the confirmations, the liquidity sweep, break of structure, and then the continuation. So on the lower time frame, that did not happen right over here. So price broke through. It took out this high. It came back down into this order block. Now becomes a breaker block. Price went up, and now we're starting to move to the upside. Now again, when price comes down, there's an order block that's being created right over here. Here we had a market structure shift. Order blocks being created. If you draw your fib from this high to this low, you will see how nicely it is in the 71.68 area. There's the order block right over there with a fair value gap that becomes an inverse right over there into the order block, and then we had a big push down. Now again, you can draw your fib. That's ugly color, sorry guys, I don't know why. It came into our 50 zone, 78 right over here. We had a breaker block right over there. There we go. Came down into a fair value gap, came down into this order block. We had a little bit of a reaction. Price reacted again from this order block right over here. We broke through this order block, came back up. So we got disrespected right over here, and now it becomes a breaker block, this one right over here. And as you can see, retested, inverse fair value gap, got tested again, and now we are continuing down. So it's use the indicator literally as just confirmation with your own trading strategy. I hope that makes sense. Hanre, is there something else? I don't think so.
No, all good. Yeah, I could just always use it on different time frames as well if you want to. All good. Just keep your charts open. If anyone has any questions, now is your chance before we do the giveaway. So please, if you guys have questions, please ask.